Traders at UBA say the Treasury bill secondary market is wrapping up the week with bearish sentiment as sell interest witnessed across board with little demand too much. Kenneth Onuoha, team member Assets and Liabilities at UBA, joins me now for more market updates. Kenneth, thank you so much for joining us on the show today. Take us through the highlights of this week's market activities, the highs, the lows, and the middle points.
Oh, sorry, it's not so audible.
Can you hear me now, Kenneth?
Yes, I do. I can hear
Great.
you, but it's not
so
exactly
now,
very
just
clear.
take me through the high points of this trading week.
Thank you, David. First off, let me start by saying system liquidity opened with a net credit balance of 993 billion this week. Of course, that led to several interventions by the CBN, wherein we saw the CBN issue OMO auctions. There were OMO auctions on Monday where we had over 400 billion, we had 400 billion offered, and then we had about 325 billion sold. Now, that took about 325 billion out of the system. We also did notice that, interestingly, on Wednesday we got another notice for OMO auction on Wednesday. 250 billion was offered, and then out of that 77.02 billion, of course, was sold. Now, the stop rates printed at 17.98% at the long end, and then that's on the auction for Wednesday. So clearly it's the various, and then of course there was a CRR debit as well on Monday. All of these actions definitely put a strain on the liquidity, system liquidity, and that of course led to rates overnight and OBB rates driving upwards to about 19 to 22% levels in the money market. On the Treasury bill side, of course, we've talked about the fact there was an OMO auction. Yeah. It really traded at bearish sentiments, basically. We experienced that there were more interest on the sell side, but no matching offers on the Treasury bills leg side. On the bonds side of the market, we also observed that it traded with bearish sentiments as well. What we did realize was that there were very little activity in the 2027 and 2053 bonds, but then clearly there are no offers to match the bid rather. Yeah. That's pretty much the rundown of the events for this week.
Well, we are definitely looking into next week and how the market is also able to shrug off this bearish grip we have at this point in time. What should we expect in the coming week?
Sorry, take that again. I can beg.
What should we expect come next week? How are investors positioning ahead of next week across the T-bills and bond curve?
Of the results from the OMO auction, we expect that naturally everybody's looking forward to the NTB auction that's coming up next week, and we expect that rates would, of course, trade higher than it stopped at the last NTB auctions. Generally, all of this is dependent on the availability of liquidity in the system, and we expect that. On the FX side, I must also add, I must be quick to add as well that on the FX side, market side, we noticed that the dollar appreciated from 993.82 that it opened on Monday this week rather. We realized that as at close of business yesterday, the dollar was trading at 793.28. Of course, that is reward for the news that broke on Thursday that the central bank central bank was delivering FX, clearing backlog of FX forward for some unspecified number of banks. So of course we expect that these trends will continue generally, and we are hopeful, really, generally.
Well, we'll definitely leave the conversation here for now as we continue to keep our tabs on how liquidity base continues to go, and also the currency market, because that's also quite the big interest for so many investors at this point in time. Thank you so much, Kenneth, for speaking with us today. That was Kenneth Onuoha, team member, Assets and Liabilities at the United Bank for Africa.